Good morning, everyone. We're going to have a nice and busy day today. I hope you're all excited. Several videos coming out today as far as earnings. Going to make up for last night, obviously, for not having a video out for this one. So we're going to first talk about IRobot today. We got some good ones in the afternoon as well to talk about. So that's what we're going to be doing today. Hope you're ready. Obviously, you see as a result, this bad boy, first off, jumped big time. Already still now in pre-market, up nearly 11%. So just based off those numbers, I'll just say, personally, I was expecting some pretty good numbers out of this company. I really was. I think they've been unfairly valued for quite a while. I do think that they've had many times where they've really disappointed on numbers, but this time I felt something it just felt like this is the time. So let's look at these earnings. I expected a beat on an EPS and a revenue standpoint. And based off of these numbers, you see a non-GAAP EPS of 84 cents beats by 53 cents, and a GAAP EPS of 46 cents beats by 39 cents. It's a significant beat there on the top line. As far as that profitability line is concerned, it's incredible. It's a really good beat for them because they're a company that usually hovers on the gap between profitability and not, and it's good to see that they finally had a pretty successful quarter in terms of that. Sometimes they miss horribly on those numbers. And revenue, really good on this aspect of 544, up 27.7%, beats by 50 million. I didn't expect the number quite that high, but I did expect a beat. So I'm pretty impressed by those numbers. To see a 27% growth year over year, it's pretty good for this company, especially when you think about the fact that this is a company that sells vacuums, right? Robotic vacuums. To see a 27% increase, quite an incredible feat for a company that sells just a common household item. Maybe not common right now. It's going to be common. I'll just tell you that right now. Everyone's going to be lazy, and they're going to love these household vacuums, okay? I've talked about this quite a bit. That's why I'm invested in this company. That's why I'm up quite a bit in this company. Heck yeah. Adjusted gross margin, 40.3% compared to 41.2% consensus. So the gross margin was actually a little bit less in terms of the adjusted, but they still managed to post a beat on that aspect. Obviously, big stuff here. Premium robot revenue grew 55% in quarter four. These are the premium robotic vacuums of them. Growth outside the U.S. was led by 39% expansion in Japan and 26% in EMEA. Really good numbers there. IRobot estimates online orders grew by 70% and represented 60% of the Q4 revenue. And that's where this gets really exciting, because I mentioned it before. You're not necessarily going to see most of this business coming from retail in the future. This is going to be a company that sells a lot in terms of e-commerce, because that's people who are going to buy these vacuums. Let's be clear. They don't want to go out as is, okay? They want the thing to clean the room for them. So they'll just buy it online. So when more people get used to this, you're going to see a better percentage in terms of online versus in-person brick-and-mortar retail. As far as the CEO, who, by the way, has been in place just 1 month longer than I've been alive, believe it or not. That seems kind of wild, right? CEO that long? That seems kind of wild. Our outlook for 2021 reflects our confidence that the growth drivers for our business will remain largely intact over the coming quarters. We believe that our success in continuing to drive solid top-line expansion in 2021 will enable us to fund investment into key areas of our business and help mitigate the impact of tariffs on our 2021 profitability. Again, referring to tariffs in which they were exempt from last year, thankfully. They got filed for some exemption in terms of those tariffs, which make the business quite more difficult, I guess. But we'll see those tariffs continue, obviously, so that will impact their profitability line for sure. For the full year, they're estimating a revenue line of $1.63 billion compared to $1.67 billion versus a consensus of $1.48. Now that's really big. That's really big stuff there. That's nearly $200 million difference in terms of that estimate there. That's really good for a company this size. And they're expecting an EPS line of $3 to $3.25 versus a consensus of $2.34. That is an incredible beat in terms of that guidance there, and that's why you see this stock having a massive growth today. We'll see what it does when it opens up. This video will go up right about when it opens up, so you'll see what that looks like. So keep an eye out on that. Now, one thing this company could do a lot better, obviously, is the press releases. I'm not going to lie to you. These are some boring press releases here. Nothing super exciting. There's a lot of words. They don't necessarily make anything concise, so you still got to enjoy it. So for the full year this year, they posted $1.4 billion. So you're seeing next year they're expected to grow that by $200 million. Really good. They were expected to have a flat year, and now they're expected to grow that by $200 million for their consensus at least. That was an 18% growth year over year from the previous year where they grew $200 million from 2019. Pretty big still growth there in terms of a pandemic year too. 28% growth in the U.S., 27% international growth. That's pretty darn nice. Yeah, that's pretty darn nice. That's really nice. So obviously e-commerce, big portion of it, as they'll mention there. GAAP net income line, one we love to look at. For the fourth quarter was 46 cents. We saw for the full, in terms of a dollar amount there for you, the fourth quarter GAAP operating income came in at $15.3 million. For the full year, came in at $146.3 million for the full year. Pretty nice there. So again, profitability, it's coming to this company, and it'll really only develop further in the future as far as that profitability is concerned. Yeah, that's pretty nice. So pretty nice. Cash and cash equivalents, we'll see. As far as some highlights, they announced the filing of a new patent infringement against Shark Ninja and its related entities. Obviously, for I think the Shark IQ, I believe, is what they're filing that patent for, which again is obviously a robot vacuum, no shocker. They introduced the i3 series across the EMEA region, so that could be some great growth there in the future, because that just happened in January. So for the next quarter, could be some great growth. They relaunched the Root RT1 coding robot in Japan in January. That could be really, really big too. They passed 35 million robots sold this quarter. Pretty nice. During the fourth quarter, they launched Roomba Combo, a new floor cleaning robot that combines vacuuming and mopping at an affordable price in certain European countries. So we'll see what that looks like and how that test goes, because that could be pretty big for them. Because again, robot mopping too, that'd be pretty sweet. Less people have to do around the house. They love it. They commenced small-scale pilots for new commercial services. Substantial progress in expanding its community of engaged, connected customers. So supported approximately 9.7 million connected customers. That's pretty sweet for the full year there. An increase of 80% since the end of 2019. Really nice. And the Roomba and Brava earned numerous accolades during the fourth quarter as best consumer robotic floor cleaning products, including from the Wall Street Journal, Review.tech, Review.com, Tech Hive, Homes and Gardens, Which, and El País, and Caden, Hayo, and MonoQLO. Don't know what that's supposed to mean, but yeah, pretty exciting. So, pretty cool. Fiscal year 21, again, this estimates. You expect a little bit more in terms of this operating income, maybe, but not too bad from a non-GAAP perspective. Expected, it's what we looked at previously. So, it's not too crazy. But again, this is with tariffs included. So that's what you have to think about in terms of that. I do want to look at the balance sheet before we go today. Then we'll look at the stock in terms of valuation, see if it's worth buying. So I get a year-over-year comparison. It's a difference of about 5 days. Nothing too crazy, but right now sitting at total assets or total current assets at $881 million compared to $594 of the year prior. That's because of a boost in cash and cash equivalents. Now total assets in general are sitting at 1.18 compared to $920 million of the year prior. Again, most of that's just due to current assets. Nothing really else has changed in terms of that. Now, what's really nice about this company is this liability line. Total current liability sitting at 307 compares to 202 of the year prior. Most of that, again, is because of an increase in accounts payable and accrued expenses. Not a shocker in a pandemic year. But what's really nice to me is this long-term liability line here. It's crazy. Long-term liabilities only sitting at $77 million. That barely increased year over year, which means overall total liabilities coming in at $385 million versus $268. Total assets rose by more than that, so you see a stockholder equity on this company of $804 million compared to $652 of the year prior. In a year, that's in a year in which they had to deal with tariffs, pandemic, all of these expenses. To see the balance sheet, first off, of a small company who only has $1.2 billion on the balance sheet have an equity of $800 million, that's quite impressive. I think this is a top-tier balance sheet. I'd like to see it a little bit larger. I'd like to see them increase some of these investments on here, but I think it's overall a really good balance sheet. So that's one thing you need to mention with this stock. And again, valuation-wise, sitting at a 24 PE, not crazy at all. A market cap right now of $3.5 billion. That's dirt cheap. This company brings in a full year revenue of $1.5 billion. So you're telling me this company is only worth twice that amount? I don't think it is. I think it's worth a lot more because this is the future of really vacuums within the house. And again, they'll have competitors, but this company is the future within that space at least. So they have a lot of benefit towards them. So keep that in mind. That's pretty wild stuff. So let's see. Let's refresh. I think we just opened, and guess what? It's not quite 11% anymore, baby. Back to 1% again. So I think there's still buying opportunities on this company. Trading at $3.6 billion market cap is cheap on this company. It's cheap. I don't think you can deny it. That's what I got for you today, though. Hope you enjoyed. Have a great day.